Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Ease of Movement TrendPeriod. This strategy is built around a classic, volume-aware indicator known as ease of movement, first described by Richard Arms. It's a trend continuation approach that aims to join moves where price is advancing efficiently. Over the next few minutes, we'll break down how it thinks, the exact conditions it looks for, the code that runs it, and a visual walkthrough on the chart. Remember, everything here is for education only. Let's get started. So what exactly does this expert advisor do? At its heart, Ease of Movement TrendPeriod is a trend continuation system. That means it isn't trying to catch tops and bottoms or fade a move. Instead, it waits for an established trend and looks to join it when momentum and volume line up in the same direction. The engine behind it is the Ease of Movement Indicator, or EMV, developed by Richard Arms. What makes this indicator interesting is that it blends three pieces of information into a single reading: how far price moved, how wide the bar's range was, and how much volume it took to get there. When price travels a meaningful distance without needing heavy volume, the market is said to be moving with ease, and the reading turns positive. When price falls easily, the reading turns negative. This EA can be applied to any symbol your broker offers in MetaTrader 5, whether that's a currency pair, a metal, or an index, and it operates on whatever single time frame you attach it to. Every decision is made on completed bars only, which helps avoid the repainting problem where signals appear and then vanish before your eyes. Who is this style suited to from an educational standpoint? It leans toward patient, trend-following traders who prefer fewer, more selective entries over constant activity. It combines a moving average trend filter, the ease of movement momentum reading, a breakout of recent price structure, ATR-based risk control, and position sizing that scales with account equity. Keep in mind that no approach removes risk, and losses are a normal part of trading. This overview is educational information, not financial advice. Let's walk through the logic step by step, starting with how a long, or buy, position comes together. The strategy requires three independent conditions to agree before it acts, and this three-part filter is what separates it from a simple momentum system. The first condition is trend. The EA calculates a 50-period exponential moving average of closing prices. For a long, the most recent completed bar must close above that average, and the average itself must be sloping upward compared with the previous bar. This confirms the broader direction is up. The second condition is ease. The strategy smooths the raw ease of movement series over 14 bars. For a long, that smooth reading must be positive and rising, which tells us price is advancing efficiently, and that volume is confirming the move rather than fighting it. The third condition is structure. The signal bar must close above the highest high of the previous 12 bars, a genuine breakout of recent price structure, and the bar itself must be bullish, meaning it closes above its open. Only when trend, ease, and structure all agree does the strategy open a long. A short position is the exact mirror image. Price must close below a falling 50-period average. The smooth ease of movement reading must be negative and falling, and the signal bar must close below the lowest low of the previous 12 bars with a bearish body. Now let's talk about risk, because that's where a strategy either protects the account or doesn't. When a position opens, the EA measures volatility using a 14-period average true range. The initial stop loss is placed 1.8 ATRs away from entry. The take profit sits at a reward to risk multiple of that stop distance, also 1.8 by default, so the target is set relative to the risk taken on each trade. There's also a chandelier-style trailing stop set at 1.2 ATRs behind price. Importantly, it only ever ratchets in the trade's favor and never loosens, which helps lock in open gains if the move continues. Position size is handled with fixed fractional logic. By default, the EA risks 1% of account equity per trade, translating that into a lot size using the stop distance, then clamping the result between a base floor and a maximum cap. A spread filter skips entries when the spread is wider than 40 points, and the EA holds only one position at a time. Again, this is educational information, and risk is always present. Let's look at the actual MetaTrader 5 code driving all of this. At the top, you can see the input parameters. TrendPeriod sets the 50-period moving average. EmvPeriod, at 14, smooths the ease of movement series. Breakout loopback of 12 defines how many prior bars form the structure we must break. AtrPeriod, AtrStopMult, and reward-risk ratio govern the 14-bar volatility reading, the 1.8 ATR stop, and the reward-to-risk target. Trail ATR multiple controls the trailing stop, while risk percent, base lots, and max lots handle position sizing. Below the inputs are the signal conditions, all evaluated on closed bars. Look at the two combined lines near the middle. The long signal is true only when trend up, flow up, a bullish bar, and a close above the prior high all line up. Trend up checks that the close is above a rising average. Flow up checks that ease of movement is positive and increasing. The short signal is the exact opposite: trend down, flow down, a bearish bar, and a close below the prior low. When the long signal is true, the code reads the ask price, then sets the stop loss one stop distance below entry and the take profit at the reward-to-risk multiple above it, before calling trade.buy. The short block mirrors this. It reads the bid price, places the stop above entry and the target below, then calls trade.sell. Notice both sides use the same volatility-based distances, just in opposite directions. Everything you're seeing runs only after a bar has fully closed, which keeps the signal stable. Now let's bring it all together on the chart. Below the candles, you'll see the ease of movement panel, with a zero line in the middle. Readings above zero, shaded green, represent bullish ease. Readings below zero, shaded red, represent bearish ease. Overlaid on the price is the 50-period moving average that acts as our trend filter. Watch the opening candles on the left. Price is drifting sideways in a tight range, and the ease of movement reading is hovering just below zero. There's no clear direction here, so the strategy stays patient and waits. This is exactly the kind of churn the three-part filter is designed to sit out. Then things begin to change. Over the next couple of bars, price starts ticking higher, closing above the moving average, and that average begins to slope upward. At the same time, the ease of movement reading crosses above its zero line and starts climbing into the green. Two of our three conditions are now falling into place. The trend is up, and momentum is confirming with ease. The decisive moment arrives at the breakout candle. This bar pushes up strongly and closes above the highest high of the prior 12 bars, completing the structure condition. It's a bullish bar, the trend is up, and ease of movement is positive and rising. All three conditions agree, and the buy entry marker appears. Notice how the entry isn't at the very bottom. The strategy deliberately waits for confirmation before committing, trading a little of the early move for a lot more certainty. From there, price runs. The next few candles print higher highs and higher closes. The moving average keeps rising beneath them, and the ease of movement reading stays firmly in bullish territory. As price extends, it reaches the take-profit target, set at that 1.8 reward-to-risk multiple of the initial stop distance, and the long trade closes out at the take-profit marker. That's one complete cycle. Patient wait, confirmed entry, and a target based on the risk taken. Now watch how the picture flips. After the peak, a reversal candle forms and price starts turning lower. The moving average rolls over and begins to slope down, and price closes back below it. In the panel below, the ease of movement reading falls through its zero line and pushes down into the red, signaling bearish ease. The mirror image setup completes at the breakdown candle. This bar closes below the lowest low of the previous 12 bars, a clear break of structure to the downside. It's a bearish bar, the trend is now down, and ease of movement is negative and falling. All three short conditions agree, and the sell entry marker appears. Price then works its way lower, candle after candle, with the moving average sloping down above it and the ease of movement reading staying in bearish territory. As the move extends, price reaches the short take-profit target, again placed at the reward-to-risk multiple of the stop distance, and the trade closes at the second take-profit marker. So across this single illustration, you've seen both halves of the strategy, a long that joined an efficient advance and a short that joined an efficient decline, each requiring trend, ease, and structure to align, and each managed with a volatility-based stop and a defined target. Of course, this is a clean, illustrative example. Real markets produce false starts and losing trades too, which is why disciplined risk control matters on every single position. And that brings us to the end of our look at ease of movement trend rider. We covered how the strategy blends a moving average trend filter, Richard Arm's ease of movement momentum reading, and a breakout of recent structure into a three-part entry, all managed with ATR-based stops, a reward-to-risk target, and a trailing stop. We walked through the MetaTrader 5 code and saw both the long and short logic play out on the chart. Please remember that everything in this video is educational content only and not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, a like really helps the channel, and consider subscribing for more MT5 strategy analyses. Drop any questions in the comments, and visit www.algobot.live to learn more. Past performance does not guarantee future results. Trade responsibly.